Yeah, we are. Christy, we're so eager. We want to get to what investors were voting today. Their ballots. Wall Street, big. The Dow Jones skyrocketing 1,500 plus. NASDAQ zooms 544 higher. And the S&P 500 soars 146.
Now we're eager to talk to Rick Reagan about the stock market historically rising regardless of which party wins. But right now, investors betting on good things from a second Trump administration.
So for a deeper dive, let's bring Rick in. Thanks for being with us. Appreciate it, Rick. Good to see you.
Good to see you guys.
You have been telling us for months, don't take money out of the stock market before the election. And at least for today, you're right. What's driving the huge gains, though?
I like your at least for today, Jeff. Even a blind squirrel gets a nut every now and then. And we were expecting a rise after the election. It's normal. Not usually this big. And I think one of the big reasons is there's just a lot of relief out there. The market hates uncertainty. And the concern was it could be days, weeks until we knew a winner. Wasn't the case. We knew a winner quickly. We knew it decisively. The market really likes that. But I also think there's some Trump specifics here. Tax cuts now are very likely to be extended. They were set to expire at the end of next year. With Trump taking the presidency, likely they're going to stay intact. That, in particular, the lower corporate tax rate, really important for stocks. Also, though, you got less regulation out there. Trump has promised, we'll see if he can do it, but he's promised they'll get rid of 10 regulations for every new one they put in. And that compares to a promise of 2 to 1 at his first presidency. And that certainly is very pro-business. And I think when the market looks through the overall agenda, it does feel it's an overall pro-business agenda. So generally speaking, the Trump victory, as you saw from the rise in stocks, was at least for now anyways, really welcome for stocks that, frankly, we're fairly nervous of what we might expect over the next few weeks if we did not have a quick winner.
And Rick, break it down even more for us. What areas of the market have benefited most from this victory?
So most areas did really well. Financials in particular, though, did good. The banking sector really went on hopes of a good economy and on lower regulation. So Goldman Sachs up 13% in one day. And they weren't the only one. Most major banks were up. But on the industrial side, under the hopes that we will have more manufacturing, a stronger economy here, you saw Caterpillar up 9%, Nucor Energy up 17%. And not to be outdone, risk assets, Bitcoin, up 9%. And that started to move last night once it started to look like things were going in Trump's direction. He said that he's going to make crypto, or the U.S., the crypto capital of the world. And Elon Musk, important to Trump's victory the last couple of weeks. Tesla got the nod for that, picked up 15%. So for a lot of stocks, it was good, but in those areas in particular, it was really strong.
All right, Rick, what do you say to all the Harris supporters out there who say Trump won't be good for the economy, and stocks arguing he supports tariffs, protectionism, less immigration? Many economists argue that'd be bad for the economy and add to the already large deficit.
Yeah, you know, it's a logical question there, Jeff. And I think taken to an extreme, those policies you mentioned would bother the markets. But for now, anyways, I think the market is betting on those pros that I just listed outweighing the cons that you did, that those will be, if there are tariffs, that won't be as big as Trump's saying. We'll see. But right now, the market's counting on those positives and to the deficit, which you know I hate. Long term, I think they're a real problem for the U.S., but short term, deficits actually can go stimulate the economy and in a way actually help what we saw with stocks today.
All right, we always appreciate your insight. Rick Reagan, our financial expert, thank you for joining us tonight.